Hi guys, it's Thomas here from COTBase.com. Welcome to our weekly COT review. Today we're going to be analyzing the 7th Commitments of Traders Report of 2026. And as we always do, we shall start off by looking at the largest changes in commercials net positions. Before I jump to the review, just want to remind anybody who is new to COT analysis that here at COTBase.com, you'll find a lot of educational materials. Not only do we have these in written format, but we actually have some really cool videos that can guide you through the analysis process. Of course, if you are on our YouTube channel right now, you might as well consider subscribing to it and taking advantage of the alerts. And of course, if you like the video, please hit that like button. So let's get started. As you can see, I've ordered markets based on the largest changes in commercials net position. We have commercials, large speculators, and small speculators in the classic or legacy Commitments of Traders report. We are analyzing futures and options data combined. There's a lot of ways, different type of reports to analyze, but this one has the longest history of COT data. So we're going to jump over soybeans complex. Whenever you see complex here on our list, it simply means that we take the individual markets within that market sector and combine the data into one. That's something for our subscribers, but we are going to look at soybeans where we have a 25% change in commercials net positions, 27 in large speculators. So what that means is the recent shift in their net positions was 25% in the case of commercials compared to a 52-week look-back period. So we take the range over here, the most bullish extreme, the most bearish one, and that's basically 100, and we see if this change size, how that compares to that range. And right now it's 25%. So it's a larger than average change, suggesting weakness coming in the near term. What I like about this signal, it's coming after a rally that's been going on for a couple of weeks now. So we are at a kind of a resistance zone over here, and this larger than average change size suggests we may see some weakening in the next few days. Moving to a 5-year chart, we get a chance to examine stress levels in this market. You can see the last one was this bearish extreme from November. Successful in the sense that the market could not continue its rise. You can see there was a rise going on over here. It came back down. So right now there's not really a clear signal from the extreme. One can argue that this major extreme is still in place and we may just see traders push the market back down. A bullish extreme would be something of this nature, commercials above 200,000 contracts net long. That's definitely not the case. So yeah, I'd say it's mainly the change signal this week. Now, of course, if you find that I need more, something I can suggest you checking out is our own unique indicator. We are not indicator developers. That's not our primary focus. Our primary focus is understanding COT reports, but we have developed an indicator after many years of research, and it's called the iCOT Intraday Indicator. You can read a lot about it on our homepage under indicators. So if you want to check it out, please do so. It's a great tool to supplement Commitments of Traders analysis, and this is a prime example of how well it can be beneficial. It works on shorter time frames. In this case, I'm showing you a 1 hour candlestick chart, but it works actually on down to like the 15 seconds. Not to say that soybeans is a market where you're going to be day trading it, but like heavier or deeper markets, it's definitely an option. And it really uses the same concepts as we do in COT analysis. It really is a stress measuring equipment. And you can see these scores lines over here. Red, you can call them commercials. Green, speculators. And you can see the same relationship. So we have a bullish extreme just around the corner when we are witnessing this decline. When we have both of these participants at an extreme, we actually get this green vertical line on the chart. We call these stripe signals, and these are the strongest signal types there are. We have red colored vertical lines. These are bearish COT or iCOT scores. And stripe signals. And then we have the AfterSignal, which is basically an updated version of the the indicator where we try to filter out and give you the best time to enter the market. We wait for the market to confirm, and then we plot the buy signal. I think it's a highly successful tool, something that especially for those who've been using COT analysis successfully, is something quite unique and interesting. Moving on to our next market, rough rice. I'm just gonna shift the settings tab a little bit so we have a nice large chart here. So we have a 21% change. Now, this is the reason why I suggest opening the chart, because in itself, the value doesn't really mean much. But when you just, eyeball it, you can see that, it's not such a huge change. The 21% COT change is not that big of a deal. If we look at the past 1 year, it's pretty much an average change, maybe slightly larger. It does suggest some weakness coming, but I would not put much emphasis on it, really. The last major extreme that I think is still taking its toll on the market is this bullish extreme that was actually present for quite some time throughout this decline. Eventually, the market reacted, and as it did, of course, traders moved away from those extreme levels, but they're not at any bearish extreme, which means I think this trend could easily continue on in the next few weeks and month ahead of us, or actually I'd say months maybe. These trends are of course long, as you can see. They do take time to reverse. The next market is the Kansas City wheat with a 19% change over here in commercials net positions. Once again, you can conclude it's slightly larger than average. It is a bullish change signal suggesting some strengthening, but not much really. I think, when we see like an obviously large change in traders' positions, that's when you can understand that something's going on in the market that they have information of. So here we have a 5 years chart. We can see that you always, the reason I opened the 5 years time horizon, because you can really understand in what range do traders shift their net position. So we can see that in the case of Kansas City wheat, we have a bearish extreme that can grow to 50,000 contracts net short for commercials, above 50,000 contracts net long for large speculators, right? Where are we right now? We're pretty much in between, I'd say, maybe leaning a little bit towards the bullish side of the market, but again, not a very concrete signal. So I'd probably just move on or use the iCOT Intraday Indicator to understand the market a bit better. Of course, COT data is a weekly data, whereas the iCOT Intraday Indicator is a real-time indicator. If we move on to a large speculator's COT Extreme analysis, you can see we have sugar on top of our list with an all-time COT Extreme. So if we look at the entire history of COT data, we can see that we've never actually seen commercials at these levels or large speculators. It is a huge bullish COT extreme. Now it can grow. Something to be aware of that, similarly to geologists measuring stress in a mountain like a volcano, then it's not going to pinpoint the exact time when it's going to erupt. But it does say, be careful and maybe consider moving away from the mountain. And that's pretty much what we see here, right? Like if this continues on for a few more weeks, the extreme widens, like nothing really happened. It does say, get prepared because this decline is coming to an end. Like it was signaled pretty well with these bearish extremes back in 23. It caught the top, but now we are moving obviously away from those extremes, and we've come to a significant all-time bullish COT extreme. Moving on to the Australian dollar, 425 report extreme. Now, of course, if we think about it, one report per week, 52 weeks per year. So if you divide that, that's like, more than 8 years since we've seen such an extreme. So actually, if we shift to a 10 years chart, you can kind of see where that takes us. So it's been 2017 when we had such a bearish extreme in the market. So it was even greater. So it's something good to do. You open the 10 years chart, you can see, hey, you know what? This extreme can even go even crazier than what we see right now. But it is there. It suggests that the Australian dollar, of course, it's measured in US dollars, is coming closer and closer to a top. So let's wait and see next few weeks, month, what's going to happen. And then last but not least, we've got the Canadian dollar with 177 report extreme. We have large speculators just above the zero line. I'll go back to the 5 years chart here for, it's just easier looking at it over here. So it is another example of a bearish extreme. Of course, we are talking about correlating currencies here. So same thing applies. We are getting ready for Canadian dollar weakening the next couple of months against the US dollar, simply based on the COT analysis. I mean, again, if you want to do a more in-depth analysis, I'd suggest checking the US dollar index, the true US dollar index, something we've created to understand the relationship, the strength and the weakness in these individual currencies. So that's going to be all for this review. Of course, there's so much to do here at COTBase.com. If you want to analyze a specific market, for instance, we just talked about the Australian dollar. I mean, we show you everything. This is the most in-depth tool house out there for COT data analysis. You can look at any specific data set you're interested in. You can chart everything. You can download the images, export the data if you're a pro member. So there's a lot to do here. If you have any questions, feel free to comment underneath the video or send us an email to info@cotbase.com. We are here to help and assist you. Thank you so much for your attention. I hope you guys have a wonderful weekend. Take care. Goodbye.